I think we're live. Hi, everyone. We're going to wait just a few minutes to let more people sign in. So just bear with us.
Oh, okay. Keep going. Right? Oh, that's good. Okay. While we're waiting for everyone to get here, I just want to mention a couple things we've been working on during our off season. We're still very busy because a lot of our tax returns have been extended. So our staff is still very busily working on tax returns, and we're working on financial statements. But some new developments in the content that we bring you are that we have put in a recording studio here at Campbell Jones Cohen offices. We wanted to broadcast live from there today, but it was a little bit more complicated than we thought. So we're back here in our boardroom, but we're going to use our recording studio to bring vlogs, maybe some tax tips. So look for that on our website. We also are planning to launch a blog. We're very excited about sharing tax topics with you because there's a lot of interest in it. And some of our staff members who you don't get to see, you usually just get to see us, they have some great ideas too that they'd like to share with you. So watch for our blog coming soon to our website.
Thanks,
It's a
Kate.
couple minutes after 10, so I think we're probably ready to get started. We're going to start, of course, with our founder, Gary Campbell.
Thanks, Kate. And thanks for updating everyone on our ongoing. I'm almost there. Good morning, everyone. It's been a while since we've all gotten together and done these Zoom meetings, but we felt this is a topic that is very relevant and timely right now, and there is a lot of questions and confusion. So I want to welcome all of you out here. We're very grateful that you'll tune in and listen to us and even participate. Most of you have been in on some of our previous Zoom meetings, but there are some new faces there, and we welcome you. We welcome your participation in it. We're hoping to be able to take questions at the end of this, and that is always helpful. I would like to remind you, if you're going to do questions, please type it in the Q&A section. That's the only place that we'll actually be able to see them and try and answer some of those. So, and as most of you know and remember, you all know us, but I'm going to kind of introduce ourselves. I'm Gary Campbell. These are my partners, Lisa Jones, Jack Cohen, KC, and Beth Mercier. And today's topic is the Employer Retention Credit, the ERC. And first of all, what is the ERC? Well, it's a refundable credit for eligible businesses who experienced a significant decline in revenue in 2020 and 2021. It is a credit based on qualified wages and healthcare expenses. The good part is it can be as high as $33,000 per employee for businesses that qualify for all quarters. How do you get these benefits? Well, there's a few ways. The first way is you can reduce what you pay in on your quarterly payroll taxes and just keep that money. Another way is to ask for a refund when you file your quarterly 941 employment tax form. Or you can even request an advance payment from the IRS. They have a form 7200, advance payment of employer credits due to COVID-19. So with that, as with anything that we get from the government, there's a lot of complications, there's rules, and there's calculations that have to be done. And right off, one of the complications and things is the rules are different for 2020 and for 2021. So we're going to review those kind of separately. I'm going to turn the time over to Beth. She's going to talk just on the 2020 requirements. So take it away, Beth.
Thanks, Gary. I'm going to start my usual pitch with reminding everyone how important it is to keep good, clean, and timely records for your bookkeeping. A lot of times it's like an afterthought, but these credits are very important to have really good records, not only just your gross revenues that we're going to be mainly talking about, but your expenses, how you use your expenses, and we'll discuss that further as we go around the table here. But for 2020, the reason we're talking about this now is they changed the rules. A lot of people received the PPP loans, and back in 2020 when it was happening, this credit did exist. However, during that time, you couldn't get the ERC and the PPP at the same time. That has changed. So now if you got a PPP, you can also get the ERC, the Employer Retention Credit. The way to get it is you're going to check your records, and you had to have experienced a full or partial shutdown, or your revenues had to be down 50%. This percentage is 50%, only applies to 2020. Okay, I'll give you more about updated numbers, but when you're looking at your 2020 quarters, your calendar quarters in 2020 compared to 2019, same quarter, if your gross revenues are down 50%, you qualify for this credit. We got this a lot during the PPP, looking at your cash receipts. It has to be the same method that you used on your tax return. So you can't say I received this revenue this quarter for tax purposes, but I received this revenue this quarter for the ERC. It has to be the same. For 2020, you can get the credit is equal to 50% of the first $10,000 of wages paid to your employees. This 50%, Lisa will hit it again in a little bit, but you can't use your PPP money and then get 50% also on top of that. It's one or the other. And as Gary talked about, you have to amend your 941 tax returns, or yeah, your 941 employment tax returns. These are amended returns because they've hopefully already been filed, or you got bigger problems. Your amended tax returns, these are paper filings. I'm sure a lot of you out there are experiencing delays with the IRS, whether it be your refunds or your stimulus payments. The IRS is behind on everything. So this will be a paper filing, and this will take a while to get back, and we'll hit on that also. So just know for 2020, what you need to do, check your revenues quarter over quarter. If you're down 50%, you definitely qualify. Make sure you reach out to us so we can assist you. And with that, Kay's going to bring you back into the future here to 2021 and tell us how we can get it in 2021.
All right, thank you, Beth. Very well put about 2020. You're probably wondering why we haven't talked about this before. And as Beth hit on, if you received a PPP loan, when the rules were originally written, you were not eligible for this credit. So most of our clients weren't eligible because we did a really good job telling you all about PPP loans, and you took advantage of that program. But here we are now in 2021. Donald Trump's last hurrah was the appropriations bill at the end of the year, and the inclusion of businesses who received a PPP loan opened the way for the ERC to have wider usage during 2020. Now, the economy was still not doing so great. Our first quarter of this year, we didn't have vaccines yet. We were still in very tumultuous times, and we might be in tumultuous times still. But back in March, the American Rescue Plan Act was passed by President Biden, and it included updates for the ERC for 2021. And of course, as we've seen over and over again on these programs, the further we go, the better it gets for our clients and for the taxpayers to take advantage of this. The amount of wages, or let's start with the gross revenue. The gross revenue threshold was 50%, down 50% in 2020. In 2021, you only have to be down 20% quarter over quarter as compared to 19 before COVID hit. The 20% down in gross revenue, again, is on the basis that you file your tax returns. So if you are a cash basis taxpayer, you're looking at the same thing. We just completed the second quarter. Yesterday was the end of the second quarter already. So it's real important that you very timely get your accounting records together so that you can see if you qualify for this. In first quarter, If you were, let's say, first quarter was still difficult times, maybe your business was down, let's say you were down 22%, give you a little bit of cushion there, you would qualify for this. And I'll talk about what you can get in a minute. But let's focus first on how business is going. You do your bookkeeping for the second quarter, and good news, it's better. We have improved. You are still eligible for the credit for the first one, obviously, because you were down and you met the threshold. And for this quarter as well, because you get to take it until you've recovered. It does end at the end of the year. So the fourth quarter right now is the end of the ERC, but keep that in mind as we're progressing through the year. If your business is going well right now, great. If something happens in third quarter, hopefully not, but if something happens and you should be down by 20% in gross revenue, you would be able to take advantage of it then also. And then the fourth quarter, if you recovered, but you were down in third, you could have that too. So it is a very lucrative credit if you apply for it. Now, what do you get? In 2020, you got $5,000, 50% of wages up to $10,000 per employee. In 2021, that has increased to 70%. So you potentially could get $7,000 per employee, again, if you qualify for this. Wages do include company paid healthcare benefits as well. So keep that in mind. And this is very much it is a payroll credit. So in many cases, you are amending 941 payroll reports to get this. It's a paper process. It's slow. So while big amounts of money that you could potentially get, it's going to take a while to get it. So your patience will be needed as if you do qualify, yay, but then you'll get real excited. Contact us. You can engage us to help you with that, but realize it's going to take a while before you actually see the funds. And with that, I'm going to pass it along to Lisa, who has some special considerations for us to look at with this program.
Okay, thanks. As we talked about, the first step is really to see if you qualify, whether it's 2020 or 2021. So we're looking for that revenue decline in both years. One of the really nice features of this that I don't hear talked about too much that you just touched on, Kate, is the look back revenue decline provision, meaning you look from quarter to quarter to see if you qualify for that revenue decline. You're able to use the current quarter, or you can look back to the prior quarter. So if first quarter of this year, you qualify because you're 70% of wages, you get the credit. For the second quarter, you may not qualify, you're recovered, but under this look back, you would use that to qualify. So at a minimum, if you qualify for this credit at all, you're going to get it for 2 credits, which can be pretty significant. For 2 quarters, you'll qualify for the credit, right? Yeah. It's going to be based on, as Beth mentioned, tax basis revenue. So if you file on a cash basis, you're looking at cash basis. If you're accrual, you're going to look at accrual to see if you qualify for the revenue reduction. The credit's going to be based on FICA wages that you pay to your employees, plus health insurance benefits. Not that they pay, but the portion you pay as the employer. Another important thing to talk about is if you got the PPP money, because like Beth mentioned, originally you couldn't get both. Now you're allowed to get both, but you can't use them for the same dollars. So for this 8 to 24 week period, if you got PPP, even if you qualify based on the revenue decline, you're not eligible because that money was already earmarked for PPP. But something important to consider that we've started talking about lately is in your PPP forgiveness, you could use payroll or non-payroll costs. For people that weren't eligible for the employee retention credit, we said maximize payroll. It's easier. It's to get it through. It's a simple calculation. We're kind of reconsidering that right now, because if you have not applied for forgiveness at this time, you may want to look at using more of those non-payroll costs so that you're using less of them to qualify more for the employee retention credit. So if you have not applied for forgiveness yet and you think you might qualify for here, I would just say, give us a call, let us look at it with you and talk about how we can maximize this credit because there are a few things to do to potentially get you more money back. One other thing to point out is similar to PPP, there are some affiliation rules. This program's a little bit different than when we kept talking about PPP, it was an SBA program. This is an IRS program, so the rules are a little bit different on the affiliate side, but it's important to realize we're following IRS affiliation rules. So if you have affiliates, you need to look at the group to see if you qualify for the decline. Again, if you have questions on that, let us know. We'll be happy to look at your individual situation. There's also some limitations, like all programs we talked about for the last year and a half, there's still some open questions that we're waiting for more guidance on. One of them is wages paid to owners and related parties. It appears that these are limited. I hear we're waiting on some more guidance on particulars of that, but be aware there's some limitations on that for wages for owners and family owners that are on your payroll. One other big difference in PPP that we talked about is that was a non-taxable grant that you ended up getting once you got forgiveness. This is actually a taxable credit. So realize when you receive the credit, it's going to reduce the expenses on your tax return, therefore increasing the amount of tax you have to pay. It will also come into play for the qualified business income deduction or the 20% QBI deduction because you're reducing wages and that factors into that calculation. You probably don't need to worry about all of that too much at this point, but you do need to realize if you do get this credit, you should give us a call. We should do some planning so that you're not surprised at how this is going to impact your taxes at year end. And just so we can plan for it. Another thing I just wanted to mention out, it does not change anything from your employee side. They still get the W-2 showing the same amount, whatever their wages were. It'll show on your tax return. W-2 reporting remains the same. There is one other rule regarding small employers. So back in 2020, there was a small employer exception. Anyone under 100 employees, all their employees pretty much qualified for it, whether they were working or not working. And if you were over 100 employees, this only qualified for those employees that you were keeping on the payroll because you were just a good employer and wanted to keep them on the payroll, but they weren't actually working. The limit for that went up for 2021 as things kind of opened up and got better, so to 500. So if you don't have more than 500 employees, all your employees are going to qualify for this. If you are over that 500 employees, realize there's some limitations for employees that are actually at the office working compared to those who you're just keeping them on the payroll. And I don't think we can say enough patience on this one, that if we run some numbers, we've been doing them for clients. We've gotten clients back hundreds of thousands of dollars on this for single quarters, and they qualify for multiple quarters. But we're waiting, and it's going to be a process. So yeah. I don't think we can say that enough. But so those are just kind of the special considerations we wanted to bring up, and then I think Jack was kind of gonna summarize things for us.
So kind of recognizing the fact, similar to PPP, that we kind of threw a whole bunch of information at you at one time, recognizing the fact that the rules are always changing. Let's step back for a second, and you kind of have to take this in the right pecking order. So number one, you have to determine if you even qualify. Okay, you have to have that reduction in gross revenue, either for 2020 of 50% or 2021 of 20%. Well, in order to do that, to piggyback off what Beth said, your records really have to be up to date. And we have many clients that maybe do not do bookkeeping on a real-time basis. Maybe they do it once at the end of the year to do the tax return. Well, unfortunately, if you want these credits, your bookkeeping is going to have to be up to date, and we would hope accurate. I think the other thing to consider too, and we kind of touched on this, these calculations, depending upon how big your company is, how many employees you have, can be pretty complicated. Now, to the best of our understanding, even if you use a payroll company, they'll actually prepare, I believe, the amended 941s, but they won't do the calculations. So at the end of the day, the calculations are going to have to be done by you or your CPA. I think the other thing to touch on, I think what maybe Kay said, Amended returns at the IRS were always problematic, even before the coronavirus. They're processed totally differently, and they pretty much just sit in a pile until a physical person actually looks at them. We've talked before this Zoom meeting. I mean, we had turned in tons of amended returns months and months and months ago that still haven't been processed. So even when we get to the point of we have to file amended 941s, you can't have any expectation you're going to get this money anytime soon. I mean, and as clients have complained to us all the time, I filed my amended return, where's my money? There is absolutely nothing we can do to help speed this process along. We file the amended returns, the IRS logs it in as accepted. After that, it just sits there until they get around to it. Unless clients want to go hire an attorney and sue the government, probably not a good money move. There's really not much we can do. So again, step number one is hopefully everybody's records are up to date. First, see if you qualify. And if you think you qualify, then we move on to the next step and we'll help everybody do the calculations. Like even with PPP, I mean, even though it's kind of free money, there is an effort that's involved to get it. And if you want to take advantage of these programs, you're going to have to put some effort into working at it. And I think that's pretty much it.
Great, thanks, Jack. We did leave some time for some questions, and I see some up on the board, so maybe we'll do the questions. I'm gonna try and see if I can read those, and whoever can answer, go ahead. So we have one, for 2020, do you only get 50% of the employee payroll for the quarters that were down 50% or for the whole year?
And I believe, I'm seeing a lot of questions on 2020, so I did a terrible job on my side explaining 2020, so sorry about that, guys. For 2020, it is limited, and correct me if I'm wrong, for $5,000 max for the whole year per employee. So you're on.
Which is why it wasn't quite as attractive.
Yeah,
The
so-
numbers didn't add up.
Yeah, it's just a little bit, so it's $5,000 per employee, and it's for all 4 quarters. It could have been in quarter 1, 2020, could have been down over quarter 1, 2019, if you qualified. Because even though the official start date, I think, of the pandemic was February 20th of 2020, so they are allowing us to go all the way back to quarter 1. It's the whole year, but it's only $5,000 per employee. And I think the max you can get, let's say you're down all the way across for the 2 years, 2020 and 2021. I think the max is 33,000 because you get your 5,000 from 2020 per employee, then 7,000 per employee
Per
per
quarter.
quarter. So it's
And I
25.
don't think I did a good job explaining that, so I'm glad that you just clarified that it is 7,000
It's
per
so
quarter.
simple, I don't know why.
Right, for
But you know-
2021.
But I think that the fly in the ointment, as they say, is to go back to what Lisa said, at least for 2020, for the people that have done the PPP loans, if you've already turned in your forgiveness and you already gave them the calculation as to how you were going to get that money forgiven, if you took the easy route and maybe had large payroll and you apportion all the PPP money forgiveness toward the payroll, that's kind of going to block you from getting it in 2020. Now, I don't believe 2021 is fair game, I think.
Mhm.
But and we've been telling our clients all along, don't be in a big hurry to do the PPP forgiveness. Now, maybe we didn't, now to be fair, we didn't know about this. We didn't think about the ERC back then, but there just didn't seem to be any upside to be in a rush to do the forgiveness. Here's a great example why. Once you've already turned in the forgiveness application and you've apportioned all your PPP money to payroll, well, you can't get the ERC on it. So you pretty much screwed yourself. So if you haven't applied for the forgiveness yet, and you're still within the time period to apply, which we think most people are, I wouldn't do it. I wouldn't jump the gun and do it right away.
Yeah, thank you, Jack. Jack, we have a very important question to us coming in, and it's, do we charge for assistance with the ERC? Could you speak to that a little bit?
Sure. I know for PPP 1, we basically charged our clients a nominal amount to get the application done. We're charging them what I believe is a relatively nominal amount for most clients. Again, if you have a big company with tons of employees, our pricing would be a little different. For PPP2, it turns out that we were actually compensated, I guess, indirectly by the SBA. For the ERC, how much we're going to charge based on our time, how much time it takes could depend on how big your company is and how many employees. And so I think what we had discussed is, again, not maybe knowing how long it's going to take. We thought maybe we could provide clients with what we believe is a range of how much it could cost. And so at the end of the day, we think that if clients are eligible, they're going to get back way more money than it ever cost them to do this. But it's clear this is going to take some time for us to be able to do the calculations. And of course, the timing couldn't be worse because we're in the middle of tax season. And so, yeah, so it's really going to be on a case by case basis. We're not going to blindside anybody. Once we figure out you're qualified, hopefully we'll be able to come up with a reasonable projection as to what we believe it'll cost to do. But it'll still be, at the end of the day, it'll still be of a great benefit to most clients to be able to apply.
I think our process is going to be, if you think you qualify based on the revenue decline, contact us. We'll get some quick payroll numbers for you, just to be able to give you, again, a range of what we think you qualify for in the credit. We'll also give you a range of what we think our fee is going to be based on time and your records and how things are. And then you can make that decision whether you want to engage us.
And here's the other thing too. Now, this is going to sound like I'm trying to say that you have to use Campbell Jones Cohen to do this. The only thing I can tell you from past history, when a lot of the clients did their own PPP loans, they made some humongous mistakes. And I personally have seen clients that lost out on a lot of money because they thought that this was easy and they want to do it themselves, and they totally screwed themselves on the PPP. So I'm not suggesting that you have to use us, not suggesting you can't do it yourself. If you have another CPA firm that you use, not suggesting you can't use them. All I'm saying is that, as my partner Lisa tells me on a regular basis, Jack, stay in your lane, okay? And it turns out, again, if you look at history, our firm did an unbelievable job on the PPP loans. I can't remember how many millions we got for our clients.
We did 15 million.
It could be like $15 million.
Hundreds of loans.
And listen, and some PPP loans were easier to work on, some were far more complicated. Again, my opinion would be you should probably retain someone to assist you with this versus do it on your own.
Okay, let's get on to some more questions here.
I think for sure, because I think this one is so important, is the ERC money non-taxable? Because I touched on this,
Yeah,
and I guess
yeah.
not enough, it's taxable. So I think that's
Taxable.
super important to realize.
Yeah.
But I think the confusing part, it's taxable not because they're giving you the money, they're reducing your payroll tax deduction. So effectively it is.
Right,
taxable.
you just need to realize that.
Right, you
you
don't
tax on it.
Which is still, by the way, still a pretty
It's
good
still a
deal.
good deal.
Yeah.
Right, even if to get $1 for free, if you have to pay tax on $1, I'd do that every day of the week plus Sunday.
That was a good one. We also have one to confirm. You can now take advantage of the 2020 program, even if you receive the PPP loan. And that is true.
It is
You
true.
can't double dip on the money,
Yeah.
but you can do it.
Then we applied based on 2020. Do we get a check from the IRS or a credit on future taxes? Gary touched on this a little bit too. It will be a check back to you from the IRS, and like Kay said, and Lisa joked, might be 5 or 10 years from now, but you will get a check from
Yeah,
them.
they've been waiting 12 weeks. I think you're gonna wait a lot longer than that. I
12
don't
weeks,
have a crystal ball.
even
but-
before these ERC amended returns started getting filed, 12 weeks on any paper return is just unrealistic.
At
We've
this
had-
point in time.
Yeah, after the corona hit, all those amended returns sat at the IRS service centers. They had no employees to look at them. They just, half the stuff, I don't even think they opened up the envelopes. And so if you need money right away, don't be
And
spending
we
this.
haven't even been able to really get good information. I mean, we try to research this a lot and we talk to other firms and other organizations and stuff. no one is giving us a good time frame.
No.
It's like where we could say we're seeing them done in 4 to 6 weeks or anything like this. Everyone we talk to, everywhere we look, is like, they're gonna take forever. Just-
Right, and even
be
when we
Yeah.
talk to the IRS, I called on amended returns.
Yeah.
They don't know.
They
They
have
don't
no
know.
idea, and a lot of times it depends on what campus it got filed to. I recall hearing that the Kansas City campus was in worse shape than some of the others. And so if they didn't have employees there to review these returns, they just sat there. And so, I mean, it could literally be months and months and months before anybody gets the returns, the refunds. So,
I think we have a couple more down in here, Chad.
Yeah.
Gary, you want to grab a few of those?
Yeah, can someone else read them?
Either
How about
scroll
that?
up or down.
So the
That's
first one
cool.
is, do employees have to be full-time and what defines full-time?
Oh, okay.
It's a good question. I haven't seen where
but I don't
it
think.
says
that-
it's
No,
based on
it's just
wages.
based
It's
on
based on
wages.
wages.
Yeah.
You do not
I
have to
guess
be
the other thing
full-time.
too, and there's no like full-time equivalent,
No,
maintaining
no.
employees
Because
or
it's based-
anything like
It's
that.
based on dollars, and then there's a cap per employee. It
Right.
would make no difference. whether
Yeah,
you're
so it's based
full-time
on
or
dollars.
part-time. Yeah.
Another good
The
question.
only time that
Good
it would
question.
even be a question is if you were close to either the 100 employee threshold or the 500 employee threshold, for 100 for 2020, 500 for 2021. If you are, then let's talk, otherwise I wouldn't worry about it.
Yeah.
Read that next one, because I'm not sure the
Okay.
answer.
This one is about a PPP forgiveness. I applied for PPP forgiveness and filled the forms with non-payroll costs first, then payroll. But the bank on its own applied all forgiveness to payroll. Is there any recourse?
Find another bank.
Yeah,
Because we've seen that, we worked on one yesterday, where the bank what happened in this case is the client really wasn't eligible for PPP, and the bank just gave them the money, and now they go to apply for the forgiveness, and the bank now all of a sudden decides to look at the numbers and said, well, we gave you 50 grand, but the truth is you were really only entitled to 4,000. So consequently, we're only gonna forgive 4,000. I don't want to mention the name of the bank, but the bottom line is, that sounds like this is gonna be a bank issue. And we couldn't possibly tell you what to do. I mean, that would be a dispute you'd have to have with your bank.
And I need to clarify a comment I made earlier. The 2020 Q1, that quarter does qualify to find out if you can get the $5,000 for your employee. But the wages, you don't start calculating the wages until March 13th. So you
Go back to
would have had to,
January.
yeah, so if it was Q1 that you were down, there's a shorter period. And I guess to qualify everything that we have all said, this sounds pretty simple, probably on the surface, but this is a very complicated calculation. Lisa hit on just a few of the additional qualifying items and limits and things like that. There's a bunch of them, and we would be here all day, going through each and every one of those. Just know that if you do your quick look down, like Jack said, you don't have to use us, but we are here and available for you to assist in this calculation.
There's a top question. It says, I filled in the first quarter 21, Form 941 for 7,000, and you got the check in 6 weeks. I'm guessing no.
That's
would be
great.
a-
That's
However,
wonderful.
was that, I'm
That
thinking,
wasn't an amendment.
no, that was an original
That was
return,
an
right?
original return.
Original returns get processed totally differently than
Right.
amended returns. So yeah, if you did the first quarter and you included the credit on there, they're gonna process that return, you'll get the money.
And that's the thing the second quarter of this year just
You still have
ended.
time, yeah,
Right.
time.
You have time before you file those 941s for the second
But I
quarter.
think to do pretty soon.
But
though,
you have to
right?
be fast.
You
That
gotta be
means you
fast,
got
that's right.
really
Yeah.
good, clean
Right.
records
And
to
like,
use.
another important thing to talk about this, and I know we don't want to get too much into this, but you can actually short your payroll tax deposit. So if you know you qualify for it,
Send the return and just not the money.
right, so
Right.
if you're halfway through the quarter and you know you're gonna qualify this quarter, you can literally stop sending in those payroll tax deposits as a way to get the money back. There's also, like Gary mentioned, that 7,200 form that, believe it or not, the way you file is you fax that to the IRS.
Oh, man.
And
And then it sits in a pile.
that's supposedly for the quickest refund, but again, they're
Yeah.
backed up on that too, and it's coming over
Hold
through
on.
fax, so.
And again, that reducing the current payroll
It's the
deposit.
same thing. You still get your money.
Yeah, but sometimes you don't know if you're gonna qualify, except
Yeah.
as you said, if you qualify the first quarter,
You know
you
you
automatically
automatically
qualify
know
the
the
next quarter. So if you qualified this second quarter, you could easily do that for the third
For the
quarter.
third, yeah.
I see 7 people dropped off and I want
Oh.
to know who the hell they are.
Well, it is
Okay?
past
We
10:30.
started with 35, we're down to 28. I'm kicking ass and taking names.
We have a list.
Okay?
We have a list.
That's right.
And I do see one last question. Do we qualify if our business started October 2020? We don't have 2019 numbers to compare gross revenues to see if we're down. I do believe that in 2021, you can look at the same quarter in 2020. So
But
Yes,
that's October.
yes, in October, if you're down, hopefully you're not down. I hope you're not down though, because it's a new business. So I hope things are going well for you and that won't be the case. But yeah, technically you would when we get there.
There is a new business provision in there that if you started in 2020, you'd still qualify, even though you don't have that base year 2019. So,
Right.
But in this case, was late in the year. that
Yeah,
we
it's
did.
late in the
Right.
year.
So not until the fourth quarter.
so they have
Yeah.
something
we
to
would
benchmark.
qualify.
Okay.
All right.
Well, hey, and if there's any questions we missed, or you think of any questions afterward, there is ways to contact us. Just call us, and I think we've kind of agreed that if you have any questions, maybe rather than even ask to speak with maybe the person that was working on preparing your 20 return, maybe just ask to talk to the partner. I think that's what we agreed. So just call your partner, okay? And to the 28 of you who still hung in there, thank you. We appreciate
Thank
it.
everyone. Those were some great questions.
Yeah.
Thank you
thanks for
very
your
much.
participation.
All right, everybody have a great day.
Thanks.